All right. I started recording late. This is South Factor Wednesdays. We going over the CL right now. All right. So look, when it comes up with that bullish engulfing, because it took out the previous candle, right? This your bullish engulfing. Boom. Indecisive candle, you got a doji, and then you got this weak bearish candle. Technically, that's still forming an even star. I would like to see more rejection from the bears, but it's weak sauce. It give you that, right? But at the same time, remember, this is rolling up to the New York. It didn't really pick up steam into here, right? This one it consolidated and broke down. But the real volume comes in later on throughout the day. So watch this. Let's add a volume indicator because I don't use volume. Oh. Okay. All right, let's collapse these. Oh no, I meant to collapse it. 1 second. Collapse. All right. So you see, volume is low here, right? They had a nice spike here at 545, right? It spiked, but it's very low volume. I don't like trading in low volume because the prices they'll consolidate there so long where eventually it can like come back and stop you out because with low volume in markets like this, you have traders with enough weight that can say, hey, we can go push to that order, whatever may be the case, right? And also the move may not play out or they can bounce it and change their mind or whatever. I want to go from point A to point B. So you see when spikes like this start picking up. Oh, let me cut this on. This is something y'all may not know about. But you want to see the average volume, you go to style, volume MA. So when the bars get above that, they're letting you know volume increasing. Only thing about the volume indicator is reading bulls and bears. They just letting you know what it closed like, right? Who took it at the last moment. But you see right here, 842 volume picked up. It started picking up and boom, 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 boom. It got up and got somewhere, right? Now you had a spike here. They took it back down again to drive into the order block. From there, most traders took it from here back up, right? Now, mind you, this would have been a nice double top, right? But they violated it. They swept liquidity. So they actually did a liquidity run here, right? Then picked it up. Then dropped it. You see what I mean? Back down until the zone. Let's get that crap off. Right? But later that day, because I knew this was a range expansion, right? Because they took... So this was Tuesday, Monday high, Tuesday high. They traveling downwards. Like, okay, cool. Took out Tuesday low. They picked it back up. They came and took Monday low. You see, they barely squeaked past it. So once they start reacting inside of this OB, I knew like, okay, cool. We have a solid double bottom potential setup here because of the V. Remember I told you this on Saturday. You got a V, upside, A, double bottom, B, double top, right? So, boom, boom. Now, remember, this pattern do not pose to break out like this. This is a bearish pattern, right? It pose to reject and come down like that, okay? Let's do. This show breakout. All right, be on. So this your breakout level. This is your resistance. When they broke past that, this no longer a double top. Okay, it's none but a chart movement. It's no longer a pattern. Throw it out your window. Okay, if it was one, you'll take resistance to support, clone that, boom, drag your measured move down to your support, and this is your measured move. That'll be a 53 tick move, right? So from there, how you would safely play that, and I'll show you. I demonstrated it over here because it's the trade I actually took with Everett and them this morning. But also, you don't want to be too greedy, so you want to say, hey, let me take this back up to a 25 tick or 26 tick take profit. That's the midway point. I do 2 measured moves. One, the full move, then the second one to say, hey, if anything get janky, let's get out of Dodge, right? But this didn't play out once again, so you just measure it twice. Let's clean this up real quick. And then we're gonna switch over to the chart. So this one didn't play out. Okay, false. This was a false double top. This reason why, another reason too, you don't enter the trade super early saying, hey, this is a double top, because you would have took this entry saying, oh, it's gonna reject, and then from there you get smoked out. That's why I say the pattern is not the pattern until it breaks out. Okay, if it don't break out, then it's not it. It got to get back to the other side of the market. If it don't, it's not what you say it is. Okay, so here, once it got down here, we seen price, boom, show its support, then return back to the same zone. Okay, let's get a box right here. Boom. So you had price come back into the zone, just letting you know, hey, this is a zone of support. And what happened? We had a reaction. All you had to do is mark out your what? Resistance, right? That's why you go on here, throw this purple little pinkish line here. That's my resistance. So from there, once I seen price came up here, made one attempt, didn't go. I'm like, I'm watching. Price is consolidating at the breakout level, right? There we go. So we got price boxed in, and it's shaking up. In famous words, Tony, it's like a soda water bottle. It is boop, 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 boop. It is bouncing. But as you see, the range is tightening. So at this moment, I'm watching this candle here, right? I'm legit watching this candle. I said, if they take that high, we own it. So I set my limit order at 81 on a dollar. Boom, just like that. Then I put a 10 tick stop loss on it because that's right below here on the lower time frame. This is market structure. So we go. Show y'all this real quick. All right. Man, that was the 3-minute chart on a 1. So right when they start bouncing, this was a plateau. I'm like, if they take that level out, I'm fine with being stopped out here. You get what I'm saying? So I'm watching it, and they did exactly what they supposed to. Seemed like a 4-tick drawdown, but it's smooth. It ran. Only thing about it was I measured out a 72 tick move. Yeah, so let's go back from support to resistance of 71. Clone, boom. You fired it up, right? So my measure move was up here. Only difference was I trailed it up to the order block. Once I seen it start consolidating up here, I went on, took profit like at 40 ticks. And the thing about it is I had to slide this thing over. That's the reason why I backtest. Because before y'all got on, I was actually backtesting this. I was like, I highlighted this zone earlier today because this is what they broke out of. I was looking for them to make a stronger retest here, but they didn't quite do it. So I just kind of like whatever with it. But I should have standed that zone out because when it got there, that's when I missed a second chance opportunity. But I prefer to take a one and done trade. So I took my one, booked those profits, and call it a day. All right. But what it wound up happening is, let's go on and exit this and y'all can see for yourself. Right. It got back to that OB and simply reject. And that was a 88 tick move to the downside. The real move, you could have took it from here if you would have been like watching price, but that still is in a bearish setup. I need a reason why to go long, and this was my reason why. It was enough ticks on the board to say, hey, 70 ticks worth my while. I'll wake up for that, right? Anything less, I would have rolled right back over and said no thank you. But this was worth my while. I took my trade, had my auto break even in, you know, set my alert, said, hey, when it goes 16, it'll move my auto break even into the profit, like it's a profit. So now, the trade is paid for. I can put my phone in my pocket and go back doing what I was doing. I was low key running my mouth. Be like, I'm just shooting the crap. We just shooting the crap, bro. Like, not just going on about whatever, right? At that moment that we was having conversations for, right? But yeah, after that, I'm like, cool, I'm done with it. I'm out. I exit the trade close to the high. Boom. And yeah, that's that. But that's the purpose of understanding chart patterns, using proper risk management, and also just being patient. Because I would wanted to chase this down move, but I'm like, it didn't give me the best entry possible at any one of these other stages. You could have got some ticks here, right, over in this ballpark. Let me put that on the highlight. You could have got some ticks here or something over here when it did a market structure shift. It's not something else I talk about in my other videos, but this one, we ain't here for this today, okay? But y'all know, y'all go watch the last video. I'll talk about this market structure, shift breaker structure, all that good stuff. Boom. So you got the breaker structure, which they swept stop losses, right? Because you went short here, they definitely ran you here, and they also got a little bit here, right? So, boom, took out the high, made a new high, dipped down, failed to make a new high. So that's your market structure shift right there, right? Boo-doo-boo. MSS. And then from there, they cheese slid out the cracker, and it is done. Okay? So that's that pattern. Now, we're going to actually go to the chart for the reason why we're really here. So we're going to back test that 2050 EMA crossover that Ray put in the chat for us. So we're going to switch charts. We got this nice clean chart over here. And let me grab some EMAs. I use a 3 EMA. I don't need all of them. So, Ray, I'm guessing you go long when you get the 50 crossover. And you go short when they cross over. You just pretty much taking signal to signal, correct?
Yes, that's what I've been practicing on, back testing.
Okay, cool. So,
but I'm having a hard time putting in all the codes and stuff, but I'll figure it out. I'll get it down.
Okay, so ain't no problem. So what part are you having trouble with?
Inputting the codes and stuff in order for it to back test it.
Oh,
so
So that's the reason why we doing this, right? So I know what you talking about. You trying to do that little trading strategy tester right here?
Yeah, the strategy tester. Yeah.
Nah, son. Nah, you got to get in the dirt with it.
Okay. Show me how. Get me dirty, Neil. Get me dirty. Show me.
Yeah. See this right here. Right here. That's that liar. This gonna tell you whatever they want to tell you. They gonna play with you. Nah, for you to really know this, you gotta get in here. You gotta get in the trenches with this. That's that lazy way. I told you, ain't no lazy way.
Okay. All right.
So, what's one of the instruments you trade often? What is you trying to trade?
I love AMD. I do love AMD. Yeah.
Okay, cool. So what kind of trade are you taking? You scalping, swing trading? Because that's a long crossover. So are you a swing trader?
I don't want to say scalping if Tony's on here, but until I get more comfortable with swings. Even though I do have some leaps, but for like Nvidia and Tesla, but yeah, exactly.
So
mostly for scalping.
So I'm just gonna tell y'all back. 2050 crossover is a long amount of time for a crossover to say, hey, I'm just gonna be scalping. Cause you gotta look at it. It's looking at the 1 hour chart, right? We got to cross over here and then cross the back over here. So you're missing out. You're missing out on major money just by doing that said action. You see that? If you scalped that, you would have been like out on one candle because this is a 1 hour chart, right? And then by the time it told you to get out, you miss all this money. Look at that run. So that was a $21 move there. Took 8 days. 8 days. You feel me? Now, if you throw in your price action, you can kind of see when you should and should not, because you see how they driving price down right here. And then once they took out, come on with it. See, that's why you gotta go look at the last video. They took out market structure, right? They took that low and then they did the retracement. But this time they did what? I'm just gonna draw it on the screen. I need you to say it for me. What they do here?
Oh, wait.
Don't tell me you wasn't paying attention now.
From that point to that point, they went higher.
All right, but what's this called though? What we call this? From here to here. What we call it?
So she said it right now, higher.
Nah, so this is a shift in market structure, right? Because market was going on what prior to us coming to it? It was in a downtrend, correct? See, that's where it came from. Boom. Then it hit a low and started doing this. It changed direction. right?
Oh, I thought
Because
once it took out the that previous high over there, that's when it's a breaker structure or whatever.
so what it did was
Yeah,
once
lower
they
high.
failed to make a new low, that's a change of structure. You get what I'm saying? If they was gonna drive it down, in my same example I gave with the double bottom, right? It should have went like this, and price should have returned back to this low. If not, take the low. You get what I'm saying? So let's cut the moving averages off, and this is the reason why you must add price action to your skill set so you can avoid these mistakes, right? Boom, that's what price was doing. Boom, it wicked. Price went up. Okay, cool. Price dropped. Price went up again. Price dropped. Right? So let's clean this chart up a little bit. We can put all this other stuff back. Don't worry. All right. Let's go ahead and spread this like peanut butter now real quick. There we go. So you see what happening, right? Price went up, took the low. They took this low out. Right? Boom. They gap down, took that low. All right, price came up again. What did they do? Take the low. So we're getting progress, right? So when price came back up for the retracement, they filled the gap.
Oh, yeah. Right. Yeah.
So they filled your gap here, right? But price failed to do what? Price failed to come back down to the low. You get what I'm saying? They failed to come back down and retest this level. So the moment they fail to retest this level, we draw a trend line and say, hey, what's going on here? They should be coming down here, not staying up there. See?
Okay.
It's just like when your friends say, hey, I'm just going to go over here and grab this drink real quick, and you see them in VIP and ain't coming back. It's a market structure shift. They switched up on you. They brand new now. They looking at you from the VIP like, hey, man.
I got to look into the market structure shift. You have any videos on that?
I have plenty of videos. The last 5 appears that, you feel me? You go look at the last 5 videos I done. Yeah, I got it all in there. Especially last 2 for sure. That's we've been going over that hard.
I'm getting that confused with the break instruction and everything. So this is something totally different.
It's pretty much you following, like, it's all in the same. It's the same pattern. It follows each other, right? It has a rhythm, right? So when you have the break, they come down, right? We'll say, okay, cool. We see what they doing here. They took the high because they needed liquidity. But then you see they break down. And after they break down, they find a new low. What it do? It pulls back. Then it breaks down again. Then from there, you're going to pull back. Sometimes they run a little bit farther than that because this is where they say we are fully extended at. You feel me?
So from that higher high right there, that's in on at the top right, and the one over there at the peak on the left, is that considered a change of character or breaker structure? Where you had the line at the top?
Oh, you talking about right here?
Yeah, from that line over. Yeah.
So they broke the structure here, right? So the breakout, because they didn't hold, they actually broke out, and start making new highs. But this the key. These things come in handy when price is peaking out. You get what I'm saying? You may not catch it right on the dime, but once you notice price is not returning back to key levels or behaving like it should, price should always be aggressive in making progress. Failure of progress means something is going on. Okay? So when it no longer made progress to the downside, well, guess what? Something is up. We need to be wary about that, right? We need to be a little leery. So that's the reason why you add these skill sets in. But we ain't here for this. We're here for your strategy. So let's clean the chart up real again. All right. Now, do you use any oscillators too? Because this is your strategy.
The RSI.
All right. So you use the RSI. Okay.
And then I've been messing around with the, well, I don't know. That's not a, what's the PSAR considered? Just an indicator, right?
Yeah, it's an indicator. So we're going to do RSI in your EMA strategy, right? Now, what time frame do you do this strategy on?
The 15.
15 minute. Okay, so we're gonna
The
go
5
down.
and the 15 side by side.
Okay, so we're gonna go down to the 15 minute, right? And then from there, you got your scratch paper.
I do.
So, all right. So what we're gonna do is we're gonna pick a date. We're gonna pick a random date because you do. See, you can see that little calendar right here. Let me do it again just in case you missed it. See where it says 1D through all 15 Y, all that crap, right? So you got go to.
Mm-hmm.
Click that. Then you just pick a random date and time. Well, we'll say December 23rd. Let's go January 24th, right? And on this, we're going to go to 11th, which is a Thursday. And we're going to go to. Boom. Here we go. Now we're here now. And let's see. And then there's two things you can do, right?
Okay.
You can do replay. And we can watch the behaviors. But first thing we want to do is we want to go back and say like how many times what all happened every time it crossed over, right? So we're gonna mark on your chart like this. Boom. That's the EMA crossover to the upside. Okay, great. What happened here? Then you're gonna grab a vertical line and say, what was my RSI doing? Oh, let's make this RSI a little bit better. So let's go inside the settings. The middle line. I like to paint that thing yellow. Make it visible. Cool. So this yellow is our 50. Then let's make this. We're gonna make top side green. That's how we know we're bullish up there. We super bullish. Bottom side red. Okay. So we cool with that. So now we can see. So this what happened. Our RSI was above the 50. Right? All of it was above the 50 and it was taken off. Cool. We had a high price. Now, when price came back down, guess what? Since you ain't got a crossover, until you get another crossover, you're still bullish on this. So every time it retests the 50 and finds support, you supposed to go long, correct? Is that part of your trading strategy?
Yes.
Peace and blessings, Brandon. All right, so that's what it means. So you're going to say, all right, cool. Every time it finds support, add that to your plan. Either you're going to average or you're going to re-enter your trades at the 50. Because see, when you get a blow off top, keep these in mind, right? When price jump off your moving average, you're going to make an aggressive pullback. So if you are in right here and you see this coming down, things going bad, don't go with them. Okay? So keep that in mind. You take profit, wait for it to find support, then you can re-enter your trade. But you see
right.
And then we're going to ask, price bounce out to 50. Okay, great. How long did it last before it get another strong bear candle, right? Before it broke the 20. Cool. That is 3 days. This is a swing trade, miss. You missing out.
Okay.
Come on now. Look at this.
Okay, I got you.
Now watch this. So it bounced. This is where it bounced at. You would have took that, bounce out to 50. Boom. You got that 50 piece. From there, you running it up. You tell them you're gonna be in here for a good time, or you gonna stay for a long time?
For a good time.
A good time? That mean you only in there for 5 minutes, 10 minutes.
No, I mean, I'm having a good time making the money, staying in there longer than what I usually would.
This 3 days.
That's what I'm trying to see to get comfortable with to be able to do that.
So this Thursday, all you gotta do is buy the necessary time. You get what I'm saying? If your technicals, this reason why we backtest. So your technicals call out like, hey, this is what this is. If you want a scalping setup, a 513 crossover is more than enough to get you a quick scalp, to get you some money, right? This is gonna get you paid.
Okay.
But this is clearly showing you why you need to swing trade. It's just a short swing. From this was Thursday to Monday. You could have took profits on Monday and call it a day. Because nothing in this chart said get out. It didn't hit no stop loss. It didn't make no abrupt candles like this one. It didn't come back down to the 50. You had no excuse to get out. You know what I'm saying? This is it's a home run. Why cut your winners? You feel? So if you buy 30 to 40 days worth of time. AMD is not that crazy to get some time on, right? You buy you the necessary amount of time, wait on proper retracements, right? Because now this is the reason why you got to pay attention to the oscillators. Look what it did. They came down here. Great. They stopped right at the 41 and start coming back up. The moment they put this candle in, you had that bullish engulfing. Let's zoom in on this. Boop. This is the reason why we study the candlesticks, right? So this is a morning star if I ain't never seen one, right? You got the bearish engulfing, bullish engulfing, right? Morning star pattern, that was your entry. The morning star pattern was your entry to this trade. The moment they took that high, this wick, you already know what time it was. Your RSI was already saying, hey, we smooth. Now, watch this. Let's back out to the hour chart, right? Let's zoom out real quick. This is why we do both of these. Get out there. Oh, back out again. Let's see, where is it? Should be over here somewhere. Nope, they hide from us. There we go. There we go. Boom. You had a 2050 crossover back here. This was your retest on a 1 hour chart. Your RSI stayed in the bullish territory the whole entire time. So it got bullish over here. It was just a sharp reset. And then from there, you was off and running. You see that? Let me pull it up. So this what I mean. You're cheating yourself because...
Yeah, I see that.
So you change your mindset, you can actually win more, and you can actually win, you can actually profit more on less work. So this is the whole thing. You have to change the mindset of, like, you need the money today. You don't need the money. You need to trade your plan. Your plan say, hey, this is a swing trade. This nothing about your setup say scalp. It's going to be honest with you.
Okay.
This is the only way you can scalp this, and scalping, you got to be on a 5 minute and below. So 5 to 1 or anything below the 1 minute. Well, actually 5 minute to the seconds chart, right? Is scalping time frames. When you're in 15 minute, that is a day trade time frame. 15 minutes to 1 hour, you're day trading. Hour to 4 hours, that's a short-term swing. 4 hours to daily, that's a mid-term swing. Daily to weekly, that's long-term swings. And you get to monthly, that's when you get into leaps. Okay.
Okay. So that's what I more so meant, day trading, not scalping. When you guys trade futures, what is that considered?
So depends on what type of account you got, but most people are swing trading. Most people are day trading, and some people are majority of people are scalping. So a lot of people are scalping. You have some that will swing trade in their personal accounts, and you got some that day trade. Like today, my trade took me 41 minutes to trade, but it was two things: either it hits my stop loss or it hit my take profit. Once I seen it was at a point of resistance, I cut it, right? But that's the thing, it can take amongst that time. Scalping is typically, it's still kind of considered scalping, because some people may qualify that as scalping because they say, hey, you got to hold it for damn near the whole entire day. But scalping is a 10-minute 5 to 10 minute trade. Boom, boom, you in and out. You want the impulse move, then you exit, and that's your trade, right? A scalp is a impulse candle like this right here. So let me get up in there real quick. So you're looking for candles like this. You're scalping, you're looking for candles like this. Impulse move, that's all you want. One candle, boom, I got paid, I'm out of there. But when you're day trading, you're looking for the long continuation move. Okay? So that's what I mean. Now we can go back down to this 15-minute chart. So that's one. So you write that on your paper, say, hey, we got one. That's a dub. Now, let's find another one. Okay, here we go. We just happen to rolling right into this bear setup here. So boom, we got another crossover. Well, we're going to put a vertical line there, because what I like to do is I like to see what the oscillators are doing at the exact same time. You get what I'm saying? And then later on, you can go back and hit rewind, and you'll know, like, hey, pay attention to what the oscillators are doing as they're approaching this zone of reference, right? Just leave everything on there, then you hit the rewind. We'll try to get to that in a minute. So, as you see, price is already in bearish territory as far as the oscillator go, and we got the crossover. Price make a short dip. What they're doing, bringing price back to retest. You did not get a crossover. Price is rejecting the 20 It's probably like a moving average in between here that is rejecting off of, but this is your zone, right? Remember this. Your trading zone is the spread between these two EMAs. Just because you see it break one doesn't mean the trade is over for you, right? Mm-hmm. Your risk management, since you are using a crossover, your risk management is the break of the second moving average because this is a buffer. You want to see it reject because you're going to trade it down. You need to see it come back to resistance, test, and reject, right? So when it did this, boom, and this was your trade, and you just ride it on down. It was smooth because what happened? It stayed close to your moving average, and it do nothing crazy. It was just a smooth little slide on down. They had some class about themselves, okay? They got a little ratchet right here. They had some class about themselves over here, okay? Mm-hmm. Yeah. So that's what you want to pay attention. When it does this, don't try to short that. Let it go on here, pull back. Because anytime something do this, if you miss the trade, you miss the trade. Please do not chase, okay? And stress that. So when it does this, it gonna pull back or it may do something funky. You never know. Now, I went over this pattern inside one of the weekends. It's called gap continuation, right? So you see how they pulled into this gap? You know, since I'm fancy, I got templates. Hold on. Just in case people in the back can't see it. So you see how they pull into this gap, right? Cool. Your resistance, most people will be trading that gap. They trying to get that whole gap filled. This is what happened when you get pigs versus hogs, right? Pigs gonna eat a little bit of that gap and get up out of there. They gonna take this candle right here. They gonna say, oh, it broke into the gap. Okay, we in this thing. We got our money. It's showing look like it's slowing down. Let me go on here and get out. They want 50%, right? But this what hogs get their wig knocked off at, right? They want the whole gap. They want all of it. They say, hey, if that, it still got something to go. It's still it's $2 left in this move. I want it. They say it's still a little meat on the bone, man. What you talking about? Still a little meat. The whole wig gets knocked off just because they too greedy. They didn't want some of it. They wanted all of it, right? Because you look at it, most traders gonna look, hey, that's a $4 gap. Who don't want $4? Come on now. It got to a 252. It was only $1.50 left. Did you really need the $1.50? No. But if you chose to stick around, guess what? You lost that. And then most people don't use stop losses, right? They say they're gonna turn back around. This the hope zone right here. This when you start smoking. All right. Emphasize that because people they still don't know. Where's my emoji at? Where is it? Where's my super seed? Yeah. So when you see things start going bad, you see it come out that gap. There you go. Yeah. Like wind blow, but it'll work. Yeah, blowing you. Blowing smoke on you. You smoke. You smoking. You smoked out because you chose to be greedy. You didn't have no stop loss. You had nobody risk management. You let your cheese slide all the way off the cracker. You gave all your profits back because you didn't know how to get off the charts. You didn't know how to take profit, all right? But yeah, it happens all the time. People want that extra dollar. They could have took profits. It was more than enough. Satisfied them. But they chose not to. They got smoked, okay? That's blown. That's your profits going away. That represents your profits going to zero. Now you lost money. All right? But once again, this is your zone of safety. If you took the trade here saying, oh, it's rejecting and you didn't have no patience, well, guess what? That's your fault. Or you took this candle here because guess what? When you let it wick down here, you said it's going to continue. You didn't have no patience. That's your loss. Because when it pulled back all the way back up here, because I know what people do. They see this candle. Then they enter on this candle, and then they get hit with a $4 drawdown. That don't look good on the contract. The cheese slide. I know you buying them weeklies because you scalping. That means you buying them weeklies. Mm-hmm. Yeah. You getting them that cheap stuff. Yeah. So they didn't say yeah. Mm-hmm. Exactly. Yeah. Look, it smell like a whole brisket over there smoked. Yeah. So they getting you because you got that weekly now. So when they pulling back up here, it's almost $5 drawdown. You don't know what to do now. You flip sides, you change sides. all that good stuff. You like, oh man, I ain't even like those people like that. Now you all over here trying to run up with that gap play, trying to get your money back. Then they dropped it on you. You like, oh, I could have stayed in my position. I just need to average down. Nah. You should have waited. Right?
Right.
My number one things. If the candle gonna go in that direction, this candle need to go bullish first, then go bearish. Right? So this what I like to see. If it's a bearish candle, right? Let me see. What can I do to represent a bearish candle? What? Yeah. So this what the candle need to do. It need to go up, right? And then go down. Just like that, in that order, right? There you go. You need to put your bullish wick. You need to have your wick up top. Oh yeah, I'm cold now. Yeah. I'm real cold with this. Yeah. So, get out of there. Oh. Hit okay. Then, boom. So, this what happens. Candle open here. You need to go up first. Create the wick. Then push back down. Then that's how you know, hey, we in a good spot. I can safely take this. But if it don't push up first and it goes straight down, 9 out of 10, they're going to smoke it. They're going to flip that candle. Those candles get flipped all day, every day. I'm trying to tell you. I'm trying to put you on some game right now.
I see that one. Oh, yeah.
So, watch this, right? We're going to, let me think about this. Well, we already know your strategy works, so we're going to go ahead and do this, right? That's to show you. I want to come right here, right? Then, I'm going to move this. This the candle we watching now. So, watch this. Want to go down to a 1 minute chart real quick. Boom. Remember, this is your 15-minute candle now. See what happened? They went down, up, double bottom on a 1 minute and smoked it. Right? So we go down to go back up to a quick 5 minute chart. So it's still your candle because it's the New York Open. The second year was 15 minutes in. So this is the start of your candle. See how they went down, back up. So it opened here, went down first, then back up, then boom, back up and left. That's the reason why you wait. Because the candle went down first instead of going up first. And you would have seen that resistance. But when you're waiting on the higher time frames, you don't see all these little details of what's happening inside the chart. So you want to be patient and you want to let that candle form a little bit. Hey, wick up a little bit first. Go back up. Let me see what you're going to do and then go down. Because at least I know you have a wick and I can put my stop loss on top of that wick. And if they stop me out, great. I didn't have to risk too much and I'm out of Dodge. It is what it is. But if you do not and you're just jumping in, guess what? You're going to get smoked. Okay? Yeah.
Got it. Now there is no wick at the bottom of that candle. We leave that alone for now.
Well, you see what it is.
There's no wick.
When it's pushing in your direction, right? You was bearish on this trade. When it's pushing in your direction, you need to let it push down. When it's pushing down, you need to let it pull up first and then push down. So you wanted to see it do the opposite move of what you're doing, right? You want to see it pull up first to let you know it's pulling back, retracing it to the previous candle. So let's go back to the 15-minute chart. I can show you what I mean. All right. You want to see it pull back into this candle, rebalance price, and then push down. What up, Joe? That's what it is, right? So once it pulls up, you like, great. It should push down. You want to see a candle matching the same energy. It should have been another bearish candle. This candle should have been flipped. You shouldn't close bullish. The moment, if you was in this trade, you didn't wait. The moment this candle closed bullish and this candle kept going, you should have been out by this candle here.
Got it.
Enter on candle number 2, candle number 3, you should have been out. So 1, this is my signal saying, oh, we bearish today. You would have got, that's the only drawback of scalping, right? So if you flip and you overstay your welcome, saying it's more money to give, then this thing come back. Guess what? This candle, you should have been out. Or once it took the high, this candle, you definitely should have been out. There's no reason to stick around. You feel? So yeah, and then watch. So you can do a little quick replay, show you real fast how everything should be shaping out. So we watching. Then price. Let's clean this up though. Let's get that out. So you watching how price react, right? You see how it's like, hey, we coming to it, we rejecting. This is how it should be doing it. See how price the candle flipped up. You looking to push down, right? So watch how the candles behave. You want to see like, what is it doing? These little details you ain't gonna catch all the time if you're just not doing this form of back testing. And you're just watching it. You see like, hey, they're gonna go up, they're gonna go down, they're gonna go up, they're gonna go down. Which one is gonna come first? So you see how? Wait a second, let's pause that.
Damn, there we go.
So you see what this candle did?
See, that one would have tripped me up right there. That one right there.
Yeah, because you seen how it went down first, right? Created the wick on the bottom and then flipped up and turned bullish. Okay, so that's what I was trying to show you over here. It had no business going down first. It should have went up first and then went down. Sometimes the candle can, if they really a strong bearish motion and they really gonna push it, this candle can go down, back up, and they can fight it and close as a doji, or it can really it can bounce it and then drop it, right? But typically a 15-minute candle takes a while. But here's another thing too. Look at your RSI. You down at the bottom, you in the zone where they like to start retracing it at, right? So you're just gonna like, they're gonna start retracing. We got a crossover on the RSI, so I'm watching it. My moving averages are over. They starting to get far extended away from each other. Okay, great move to the downside. Okay, we pushing. Now let's watch. Okay, we good. What's going on here? Remember, now we broke structure now. We gotta break structure. Now we riding it on. Oop, oop. Now wait for it. Let's see they gonna test this low or not. So what you'll like to do is run your technicals, right? Throw another moving average up, throw another line up, whatever you got to do to mark your chart out. Now, right there. So now we got some funny business, right? Now I'm gonna repeat it. I'm gonna draw it. You tell me what happened.
Change of market. Change of market structure.
As long as you know what it is, it's close enough, all right? Market structure.
Right.
Yeah. You close enough. Right, close enough. You know, trust me, I mispronounce a lot of words. You know,
wait, say it one more time, Neil, please. Market
structure shift.
Market structure shift.
Yes. So
thank you.
Yes, that's what you recognize it though, right? You seen how they didn't come back down?
I do. I see that.
Yeah. Now you see what your moving average is starting to do. Now look at RSI. What your RSI doing?
Getting up there.
Exactly. See, that's what I'm talking about. Now that's what you do. You like, okay, cool. Boom. Watch it. See what it's gonna do. See what they're gonna do. They pulling back. They're letting you know a pullback is happening. Now, this ain't the end all be all. Just because you see this doesn't mean you're gonna go to the moon. You just be careful. You just start paying. You just start watching it. You're in a short position. You might want to look to take profits, right? Because you don't know what's gonna happen. It could reverse. It could not. I don't know. I don't got no crystal ball. I just know some technicals. All right. So I don't know.
Okay.
But you see what happened. This was a chain event. This started it all. The next thing you know, they say, "Hey, we good. We coming up." Now the RSI said, "What? We are no longer returning back to these lows. They creeping. They on a TLC." You feel me? Now what your moving average starting to do? They starting to come together. It's starting to get stagnant. They say, you pushing you up. They start to do this. See, that's how you know something going on. They start doing this on you. They start like, all right, you got about this much now. You got about this much. You fell asleep on the trade. That's on you. Get that up out of there. Yeah. So now what we got? Let's keep going. Oh, what we got? We starting to come together. What they gonna cross? Your RSI in a bullish motion now. So now your moving average or your oscillators on the bullish side of the market is picking up steam. Your moving averages are coming together. Oh, cool. We got a crossover. Boom, right there. There we go. Oop. Got a crossover. Come back here. Got a crossover. Okay, we got a crossover there. Then there we go. Trying to make it. Okay, cool. RSI in the bullish market. You got a bullish crossover. So at this point, this thing, right? Once again, moving averages. At the crossover, did it cross over and give you a good entry? Did you just simply say, hey, because this crossover ain't going to happen till this candle close. So by the time this candle open, it's already off price. How will you enter this trade? That's my next question to you.
That's how will I enter this trade once the candle closes above it?
Well, if you get your contract,
I probably would have entered right there.
Okay, you would have just entered the trade.
Yes.
Okay.
I probably would have ended right there at that crossover with that bullish candle that right there.
All right, so since this is replay, we're gonna hit that buy button real quick. I'm gonna say you in a trade right here. It's your entry, right? So let's see what the next candle give us. Oh snap! You in drawdown. What happened? Then your stop loss need to be market structure because this is the pivot point here. This is where your stop loss need to be. So you lose $2. All right, let's see what happened next. Oh, they coming back down some more. 51 cent. Remember, you entered at a high.
Mm-hmm.
Oh, coming down some more. Oh, let's keep rolling. Let's keep. Oh shit!
Oh damn!
They took our money. They took our money. We on oodles and noodles. Why you took that trade? I can't afford this. Yeah, it's your fault. What happened? Oh, false breakout. Oh, snap, they lied. The moving averages lied to us. They liars. Oh, what happened? Because we just got another crossover, right? Short-lived, right? Where my circle thing at? See? That mean that trade would have failed. Boom. Bearish crossover now. So what we going to do now? Going to change sides? Or we going to sit out and learn from our mistakes? What we going to do?
The old me, I would have got out. I don't do this now, but I was trying to test it out because that's what I keep hearing about the crossover this, crossover that. But then when I did what Tony said as far as my wholesale and wait in between the EMAs, everything been working out for me so far. So I was just trying to see what's the deal with these crossovers. Is that true or not?
Oh. All right. So here's the thing, right? Crossovers work in the proper location. Everything works. You just got to do it in a time and a place. So, reason why we down $2. We took the crossover support way back yonder. Okay, we took the crossover here. We did not wait for a test of support. Remember, I told you about the blow off top, right? It jumped off the moving average. Now we coming way back down. We didn't wait for support. The last trade was successful because we took it out to what? 50, right? Wait for it to give you a strong rejection to say, hey, we're going to continue, right? To give you some type of reversal pattern. We jumped in at a high and we got our cheese taken. You feel me? So that's the reason why you have to have some form of patience and you need a pullback on moving average strategies. You got to wait for a pullback to take place, especially you are nowhere near support, right? So let's see. Let's get another candle in. Oh, snap, is bearish. It's steady dropping, huh? But that's the reason why we do what? We add in our other technical analysis, right? We seen like, hey, from this peak to this peak, it's bear life, right? That's simple. It's in a bearish trend. Now, this reason why you back out to a higher time frame. Let's go to a 1 hour real quick. Guess what? Remember I told you about your zone of safety?
Yep.
Yeah. So breaker structured, all it did was consolidate, pull back, right? Remember I told you about the pullbacks, right? That's all it was. On a higher time frame, there was a pullback. But on that lower time frame, it told you that was a whole buy opportunity. You missing the opportunity of your life. That's that scammer talking about on Instagram. Talking about, see, you would took this simple crossover, you'd be driving a Range Rover right now. Reason why you ain't got that new Lambo on your driveway because you didn't take my crossover. Yeah, come on, stop lying. This is exactly what it is, right? It's a pullback on a higher time frame. That's why you gotta back out, check out what's going on, and then you can enter. That's how it properly works.
Wow. I appreciate you, Neil. Thank you.
No problem.
Wow.
No problem at all.
You and Tony, y'all rock. I swear.
Man, that's what we're here to do, right? To debunk the BS and to put you on game. That's it, right? But
Yes,
this
sir.
how you properly backtest. You have a notepad next to you, document all these different actions that we did and what you are doing, right? But this you do on your own time. You pick a random date, set the strategy, and you visually watch it play out because you're training your eyes. Most people skip that process. They just start trying to put money in their pocket. This is the process for the reason why they're not profitable, because they refuse to do this part. I do this hours at a time. You do this days at a time, weeks at a time, months at a time. All day back testing. Watching the candlestick movement, watching the moving averages, tweak and flip and do all the funny stuff that it does. Yes, it's slow, but I don't care. I do it anyway. Then when I want to get faster at something, like when I want to start learning how to draw fibs faster, right? I go to Bitcoin on the weekends because the only thing open is moving, and I drop down to a 30-second chart and I just draw fibs on every change of structure. So every time it makes a pivot, I hurry up and draw a set of fibs. That's how you get your speed down pat. By going to lower time frames and you just draw out every pattern, because you got to get fast with this. You got to be able to recognize what you know what you know, recognize it, execute. Recognize it, execute. Recognize it, execute. It's a repetitive motion, but you train yourself so when you get into the real game, the real market, you're prepared to do what you need to do. But when you sitting there not doing nothing, not doing the due diligence, not charting, not posting the charts like I ask people to, right? By not doing that work, you will not get this. I don't care how many times you watch me. I don't care how many videos you go back and look, but you don't do this part right here, it's not going to come to you. This the part that actually make it work. This is why it makes sense. If you go back, do the due diligence, replay it, look at the oscillators, look at your moving averages, look at market structure, play all the different price action techniques. You replay them, say, hey, this worked, this doesn't work. This worked, this doesn't work. This worked, this doesn't work. And then you look at it. Every time we put a circle, hey, that trade worked. This trade worked. This trade worked. And you're just going to say, hey, which one honestly worked, which one honestly didn't. And once you get your sample size, try to do 20 or better. You say, well, if 10 worked, 10 failed, it's 50-50. If 4 worked and 16 failed, well, guess what? There's a 4% probability of 40%. It sucks. Throw it away. Right? That's 30%. And you see, like, well, a lot of times it doesn't work. You don't want to operate with that. You can still be profitable trading at 30%, but that's if your trade strategy actually works and you're taking small losses. But if it just doesn't work on a back test end, why would you even take that into the market? You feel me? Everything fails, everything wins. But your job is to figure out what is the highest probability of win rate you can have with one set strategy and use it until it breaks. And there you go.
My God.
No problem. No problem. Now, we have any other questions? Because I do got to go carry the boat.
Hi.
Peace and blessings.
This is really, really fun. I've done this, and when I hit buy, a lot of times I would love to automate it, and I noticed that you added a stop loss, and I'm wondering how you were able to do that.
Oh, it's easy. So we'll hit sell real quick. So right here, they updated this though, right? So now you can just drag it. You just drag it where you go. Perfectly, you want to be at market structure. That's the best place to be, right? And we'll say, oh, our target is here. Let's see if we right. Oh, cool, we won.
Yay.
So,
All right. I got into this trade, and they wouldn't let me out of it, and I ended up calling, emailing for help.
Oh, I think you lost. You lost
With
that
just
trade. You lost.
in just the practice trading. And actually I was up like million, because it wouldn't stop running. I was up millions of dollars, and I was down millions of dollars. I don't, and like they wrote me back a week later, and they're like, yeah, you have to. So I'm glad you're doing this, because this is really helpful. I just want to say thank you.
All right.
Thanks.
So
Neil.
You're welcome, but you want to get out of position. You see this flatten right here? You hit that, that'll cut you out, or you just hit the X here, that'll cut you out. Or let's say we're in a sale, you can buy it back, or you can buy it, then sell it, then also close it.
Okay. Thanks.
All right, no problem. Yeah. All right. No. I say, well, that's pretty much my time. Y'all have any other strategies? Y'all go ahead, put them in the chat next week, or let's talk about them. We can get to them next Wednesday, and we can do this again. All right. Yeah. That's peace. That's great. All right, so let's go on here. Let me do this real quick. Let me stop the share. How long before anything else? Let me stop.